Hi, everyone, and welcome to another live session with the founders of Wealthup. For those of you who are joining us for the first time, our sessions are all about helping you make smarter financial decisions, and not just about investing, but about everything to do with your money. And very excited to have this conversation today because it's a topic that I myself know very little about. But before we get into that, first let me introduce our guests. One person who's joining us is Ankit, who's the co-founder at Wealthup along with me. Ankit's background is that he graduated from BITS Pilani and then went on to be an investment banker with UBS in New York. Ankit has been very good with managing his money, and now together with him, we're building a platform so that everyone can be good at planning their finances and hopefully will become more confident and aim to retire richer, sooner, and happier. Yes, without further ado, hi Ankit.
Hi Midha, hi everyone.
Great. The next person, and who is our expert guest today, is Rishabh Soni. So, Rishabh is a chartered accountant and a partner at RSJK and Associates. He has more than 7 years of experience in income tax, ITR filing, and non resident taxation. We wanted to get Rishabh on the call because we've known him for a while, and he's very good at turning very complex tax jargon into very plain English. And that's what our sessions are all about. He helps businesses and individuals tackle everything from routine tax filings to really tricky cross border situations. At his partnership firm, we know that he's all about implementing very practical solutions and staying ahead of India's ever changing tax rules. Hi, Rishabh. Welcome to the show.
Hey, hi Ankit, hi Meda, hi everyone.
Great.
And
Rishabh, yeah, go ahead, please.
and thank you Meda for that wonderful introduction. Even I could not have explained that better. But as you mentioned, we are not staying ahead with anything, but we are trying to cope up with the ever-changing tax laws and trying our clients also get to understand that, as you mentioned, in a simple language.
Yeah, absolutely. And we'll try and definitely do that today. What is today's session all about, right? So, one thing that we found is that a lot of people are very confused when it comes to just filing taxes. And I know that historically, a lot of people don't even know if they should be filing taxes or not. So, today's session, I want to set the expectation is not about how to save taxes. We're not going to be sharing anything to do with exemptions or like how you can kind of find loopholes or anything like that. Today's session is very purely about understanding tax filing. So, like, who should be filing, why should you be filing, what are the changes that are happening, what are the things to be aware about, common mistakes that people make. So that is what the conversation is going to revolve around. And on that note, first question to you, Rishabh, right? Like, why do people struggle so much with filing taxes? Like, what are some reasons that you have seen?
I would say there could be, I think, two or three reasons to it if I could attribute based on my experience. One is, I think, is fear. That's the most critical element I would see. People are afraid of filing themselves or afraid of filing at all because they believe it is going to be against them or something negative would come around. Actually, that's not true. If you do it in a right manner and in a transparent way. A second thing that I feel is, as you highlighted at the start of the session, is as Ankit, you have been educating people. You may have seen people are not actually financially aware about things. So that makes a problem for them that they feel these are all complex tasks, they cannot handle it themselves. They can do it. Obviously, there are complexities involved. You can get your consultants at that point of time when there are complexities involved, but simple things can be managed at their end. It is just about maintaining the right details. And last of all, what I feel is today in this digital era, there's a lot of information and people get confused with a lot of information. That is what I believe makes filing difficult for a normal people. But if that be said, if people are meticulous with the details they maintain, I think it's not a that complicated task at all.
Okay. So,
Well, I think I
I
think
think
it's
we,
easier for Rishabh to say this. It's not complicated. Uh, Rishabh mentioned that no, ki people are not as financially aware about things. uh, I like to call myself financially aware about things generally, but still I don't file my own taxes. Like I've made my mistakes, paid a few lakhs in additional taxes, and now I'm like, okay, it's better that I just pay someone who's an expert to just file for me.
So, Ankit, I think for that, the reason would have been it would not have been a simple one. One thing that, as I mentioned, when it gets complex, you should always involve a consultant who is expert at doing these things on a regular basis. But when it's simple, if I say you are earning just a salary and you don't have any other source of income, I don't think that's a complex task because, especially when the coming of the new regime, it
Hmm.
becomes quite easy for a salaried person to file their own returns because there are no deductions, no exemptions, nothing at all, and they can file it straightforward. And most of the information is pre-filled. But when, as you mentioned, when it comes to any additional source of income, anything additionally, yeah, that's a complexity involved. And I would say that you should have a consultant because we strongly believe at our firm that the cost of compliance is lesser than cost of non-compliance, and you should have a compliance done by experts if you have anything that is having some kind of complexity.
Yeah,
Yeah.
but true. But ki it's also key. I mean, generally speaking, if you think about it, ki for most of the people, uh, it's like ki salary is not the only source, right? People, and as we also tell people, right, ki you should save, you should invest, and there are so many other ways. You can optimize on taxes and whatnot. So capital gains may be involved, transactions may be involved. Which I mean, if you think about from a perspective of a very normal kind of taxpayer, not too complicated and stuff, but still, things get complicated. I mean, with simple things that almost everyone would be doing or is expected to do, still, things get complicated, and it's better, again, to be on the right side of law, right? Following and complying with all the things.
I think it's also because now everybody wants multiple sources of income, right? Like if you just open your social media, people will be telling you to have passive income, multiple sources of income, moonlighting. So that's all the craze now, right? So I think increasingly people are not having just one source of income. So I think that is a great segue into my first question, which is Rishabh, who should file taxes? Like I think let's just start at the very beginning.
Okay, so we start from the very basic. If we say who need to file taxes, first of all, anyone having anything above their basic exemption limit. This they would have heard of, but they don't understand what basic exemption limit is. It's generally 2.5 lakh or 3 lakh for a normal person. And if you are exceeding your income above this threshold, you are required to file return. Apart from that, government has mandated certain people to file returns for their high value transaction, like you have foreign travel of amount exceeding a threshold, you have high credit card payments, so you have high deposits in your current account or savings account, and in these scenarios, you are required to file return even if you don't have income exceeding that basic exemption limit. Because if you are making such expenses or payments, the government believes that you may be earning from other sources which you may not be appropriately disclosing. That is why you need to keep a check on if your expenses are in line with your income as well, and you are declaring it in a transparent and a proper way.
I think here there is a confusion that people, very commonly have. You mentioned basic exemption limit, right? 2.5 lakhs or 3 lakhs. Many times, what I've heard, or what people thinking that in the old regime, ki, okay, if my income is less than 5 lakhs, or in the previous financial year, if my income is under 7 lakhs, I don't need to file tax. A very common thing because entire thing is exempted, so I don't even need to file taxes.
So again, I could put it in two ways. So one thing is filing your return is not about paying taxes. It's also about transparently disclosing how you earn that income. And the exemption is with respect to that basic exemption limit, as I mentioned, it is not with respect to the rebate. Rebate you get it once you are going for that filing. And even if you have a TDS and all deducted, you should not be afraid of filing it at all, because if you are below that overall rebate limit, you will not be paying any taxes.
Yeah, so this is a very common confusion that I have come across. A lot of people say this, hey, I'm earning below say 7 lakhs or so, so I don't think I need to pay taxes, and then or paying tax and filing return is somehow connected. If I don't need to pay taxes, based on what my income is, a lot of people think, I don't need to file return. And what has happened, like for a few of the people who were not going to file for the tax return, we I explained them how things work, and they filed, and they actually ended up getting some refund, because there were some TDS. So this is something, I have felt keep a lot of people are not aware of, that it's the basic exemption, as you mentioned, not the overall after rebate.
Yeah, that's true, Ankit. I think, as you mentioned, these are the instances we also come across. People
Mhm.
say, we have got our TDS deducted and we have no tax liability, so we are not obligated to file. That's not the actual case. And I would say idea filing should be a practice as a habit. It should not be as a burden that you are required to file, because once you start disclosing it appropriately, you have your source of the income, which is substantiated for other purposes as well. You want to go and apply for credit cards, you want to
Mhm.
go and apply for loans. This is something banks, financial institutions ask at the very first instance, and it benefits you. Because as you mentioned, if you are below a certain limit where we have that rebate, 5 lakh or 7 lakh as the case may be, so which has now been increased to 12 lakh for the next year. So people filing would be at an advantageous position, and it becomes a habit for them as well, because obviously you'll start earning more. As you mentioned, we will be building more source of the income. And when it becomes complex, then you will feel like now I cannot manage anything. Rather, it builds the practice. You start doing it, and it's good to go. And but don't confuse it, as you mentioned, that if your TDS is deducted or it's below the rebate limit, you are not required to file. You are required to file.
Right.
So, Rishabh, can you, you talked about a few of them, but can you talk about like what are the benefits of filing taxes? If you can just list it out for us.
So see, for example, people, as you mentioned, are having additional sources of income. I've generally seen they have losses in their share tradings, share investments as well. Now, if you don't file return, you don't get the benefit of carrying forward those losses as well. Apart from that, you need these ITRs to substantiate your income whenever you are applying for any credit cards, any loans. Even if you are getting an opportunity abroad and you want to go there and you want to maybe explore opportunities. So getting any net worth or PR, people comes and say net worth certificates and all, but they are not able to substantiate their sources of income. They say just so that is how important it is to file ITRs. So I would say filing ITR is not only about paying taxes, it is about a compliance and a transparent disclosure of your income so that you have a proof, valid proof to substantiate it at a later stage.
And maybe at a later stage, when you're making cross, and if there is an income tax rate, you'll be able to justify, okay, I've paid taxes.
I don't think so. It happens that way, Ankit, because it generally happens when you're trying to evade taxes. So rest assured, if you're doing it transparently, you are not going to get a rate for it because you have disclosed everything already.
Exactly. Yeah.
So maybe we can talk about now with the new 12 lakh limit, right? So what are some changes that are going to probably take place? And how should people start thinking about it? Because I think so far a lot of people um, were still in that phase where they had to kind of file taxes. But if you can talk about what are the differences going into next year?
So next year, Mira, as I mentioned, the 12 lakh limit would be there, but it would be again through a rebate. It's not that it is exempt at a 12 lakh slab. So you would be required to file taxes even if you're running 10 lakh, because that rebate is once you get it when you're filing the return, you're obligated to file. Apart from that, I see major change would be that people would be shifting to new regime, considering the beneficial regime now they have for themselves. And investment, they would be more looking from a wealth maximization perspective rather than tax saving perspective, which had been the case in the prior years. If you see, the people used to make investment in insurances or mutual funds just to save taxes rather than making it as a wealth optimization tool.
Right.
Right. I think Ankit has talked about that actually quite extensively. That, I think financial planning and having that perspective will be very important now because you're not really required to do much. So
That's it, Naki. I mean, when it comes to old regime, just to save taxes, you were taking care of your basics, right? Health insurance would be there, life insurance would be there, some investments would be there, whatever form it is in, be it PPF or PF pension, whatever form it is in. But there will be some savings and investment that will be happening. But with new tax regime, that's that incentive is going away, so many people may not choose to make those investments, or just taking care of their overall financial health. So that is something that people should be aware of.
Rishabh, let's talk a little bit about tax filing, right? Like for people who are maybe filing it on their own or want to file it on their own, if you can just walk us through, firstly, like how do you kind of go about it? What is the preparation that you would need, documentation that you would need, if any, that people should be aware about?
So let's take, I think I'll break this question into two or three parts. One thing, as you mentioned, is about documentation that you are required to. So first of all, you log into your income tax portal, fetch your 26 AS, AIS, and TIS documents that helps you understand what source of income already has been shared with the income tax authorities as well. It also helps you in reconciliation with what you have actually earned. Maybe at times what people do is they skip disclosing their interest income, or maybe some transaction they did in shares or mutual funds, which they may have forgotten it to maybe pull it out. So you just first of all get the reports from there. Accordingly, then have your Form 16, your interest certificates, your capital gain reports, and make a reconciliation that you have all the documents in place. Post that you need to, now the second part of it is what forms you require to choose. Because for filing, you need to file it in some or the form notified. So I think there are four forms for individuals, ITR 1, 2, 3, and 4. 1 and 2 are for like non-business incomes, and 3 and 4 are for business incomes, business or professional income, I would say. 1 is applicable for pretty straightforward like salary income, your house property, your single house property, or interest and other resources income, your agriculture income till 5,000 rupees. Apart from that, if you're not falling in ITR 1 bracket, you will go for ITR 2, where you'll have capital gains additionally. You have your disclosure of your any additional agriculture income, and so all those stuffs. Idea 3 and 4, as I mentioned, you will only be filing in cases when you have income from your business or profession. Idea 4 is straightforward, simple for those who are opting for presumptive taxation, which is like government gives you benefit. You need not maintain books for those specified businesses. You just need to show your gross receipts, compute a notional profit as specified in that, which is 6 or 8% for a eligible business. And if a professional income, it's 50%, and you can file your taxes. While idea 3 obviously becomes a bit detailed, you need balance sheet, profit and loss account, and there you may have complexities, a lot of complexities involved there if you're not well versed with the financial terms and all.
Okay.
I
And
think
what
I've covered all those aspects that you mentioned. If still there's some questions that you feel the
Yeah,
users generally have, I would be happy to answer that.
sure. What happens, Rishabh, if I make a mistake in filing my ITR?
First of all, don't fear, because mistakes tend to happen with humans. So it's not a problem. Just you need to be aware, because generally what the income tax charges these days is, you file your ITR, you get an automated system generated email stating that you have not disclosed this because it's not reconciling. You just need to just see what mistake you have made, and you can make a rectification if it is within the time limit, or you can file an updated return if it post 31st December of that assessment.
Okay. And what is the time limit typically?
So currently, so for this year, if we talk about, usually the time limit is 31st July, but since there has been delay of releasing forms, income tax has extended the time limit till 15th September for the filing of financial year 24-25.
Okay.
Okay, so just to clarify, for everyone, the last date for filing this year is September 15th, right?
That's for September 15th, non-audit cases.
Non-audit cases, right?
We are, yeah.
Right. And for us, like for individuals wherein audits are not needed, and it's kind of straightforward. The last date is 15 September. And yeah, I mean, a lot of people have been asking us, ki, when is it that filing will start? So any idea, Rishabh?
I think that has been the question of the month, I would say, rather for the last few months, because people have become a bit aware about filing from vis-a-vis the last few years, and they have been calling us as well constantly when we are going to start filing. But unfortunately, we don't have all the forms. Currently, for the simple returns, ITR 1 and 4, people can start filing their return. But if you have capital gains or if you have business and you are going to make profit and loss statement and all this stuff, you need to wait until the forms are released, and which we believe is going to take some time, not a lot of time, because obviously the government will give you sufficient time to file returns as well, right?
So how do we kind of find out ki, the filing has started?
Okay, so it's available at the income tax portal, first of all, but I generally see people these days are too aware and the social media is quite active. Once the forms are released, everyone will be like, now you can file, you can file.
Okay.
Apart from that, I think you can go at the income tax site, and once they notify the utilities, it will be available in the section there.
Okay. All right. And what is the penalty for missing this deadline?
Okay, so if you are not filing it on a timely basis and your income is below 5 lakhs, you have a penalty of 1000 rupees. And if it increases, if your income is above 5 lakhs, you have a penalty of 5000 rupees for late filing. The consequences of late filing with respect to interest and all would apply if you have any tax liability as well. That's it, I think. And you missed on, I would say, if you are late, you will miss on certain benefits as well.
Right. And
Okay.
Rishabh, what is the penalty? How much is the interest rate on the missed tax payments?
So additionally, you'll have 1% per month for the additional tax liability as well, which is pending to be paid.
Okay.
And what happens if I overpay? Like if I paid more tax?
Then Mira, first of all, you should file your return because then you can get your refunds. It's important. People are generally not aware. What they do is they say TDS has been deducted and they forget to file. Ideally, if you file it, you will be getting your fair share of refund as well. So if you have paid excess, try filing it on time. And once the returns are processed, you'll see that amount being credited to your bank account.
Yeah.
And there is also some interest, right? People get if there was excess payment or
Yes, from the return filing date till the date of payment, income tax does pay you interest for 0.5% per month, which is approximately 6% per annum.
right. Okay.
So, Rishabh, I've heard this term from Ankit a lot. That uh, well, he says it in Hindi कि उसका पता नहीं tax filing pick हो गया. Like essentially like I think randomly some filings are picked to like go in depth. I don't really know what that means, but essentially I think it's like some filings, if there are any red flags, get picked so that they like kind of really go in depth to see what the filing is about, is what I understand. But maybe you can tell us ki how to not get picked, like what are some of the red flags from the from the perspective of the income tax department.
So, first of all, Meda, the term that we use it for is assessment. And
Okay.
for assessment, you see that कि cases pick होने के लिए it's not mandatory that you had made any mistakes, but red flags are based on high value transactions, like you have a very big property purchase, or maybe that's not commensurate with your income file. Obviously, if you are earning less and maybe making an investment in crores, uh, the government will be doubtful of you are not disclosing your income properly. In those
Hmm.
scenarios, there are very various risk parameters on the basis of which income tax authorities do pick up for the cases for assessments. Generally, it may not be the case that you had made a mistake. It may be because of the transactions that are not in general nature or are flagged because they may be high value, they may be of some peculiar nature, which the income tax authorities want to recheck, want to verify. That is why they pick the case for assessments.
Okay, so high value transactions is one of them. What are some other kind of cases that typically tend to get picked for assessment?
your cases for mismatches, as I mentioned, when we are starting to file, make a reconciliation between your 26 AS, AIs, and the documents that you have. It is important because this mismatches is automatically picked up by the system, considering that there was something that was available with the income tax authorities as a record of your income, but you haven't disclosed it while filing your return of income. This is one of the major reasons that I've seen people receiving notices. You need to keep a check on that and be sure that you are making a filing post considering all these information.
So,
Okay.
Rishabh, in terms of getting these notices, one thing is that that I have been hearing is the key, particularly for last year, there were a lot more notices that were issued. Is that a trend that you're seeing that it may increase further because it's things are getting more automated, and for even minor mismatch on the in the numbers and stuff, the policy these notices are being issued, or anything that you have identified, or what do you think the trend will be?
I guess actually that has that may be seen in the future as well because see, government is also leveraging the technology to identify red flags, the transactions that may have been missed by the people in reporting, or there are high value transactions, and that is why you are seeing a increase in notices. But I'll term it as two ways. One is notices for assessments that are being received. Other is just an intimation that government is giving an opportunity to the taxpayers that if you have made a genuine mistake, because we see this in your return, if you have made a genuine mistake, you can rectify that by filing updated returns or a rectified returns, which I think is a positive thing because government is allowing you to make changes. However, the notices, if I talk about assessments, that I believe will go up with the use of technology because people they believe if they can maybe hide some income, or some people who are evading taxes, or some may have eventually by error forgotten to disclose something, then they may be receiving notices to rectify those things.
Okay, and in terms of these errors, okay, so is there like a small? I mean, it's like for the smallest of changes or smallest of differences in terms of the income it is being picked because it is mostly automated, or is like just above a certain threshold which may or may not be disclosed, but smaller, like very tiny things, tiny differences are being ignored, or everything is being picked.
No, actually, not very the tiny things, but if you have missed something altogether, for example, there were sale and purchase of equity shares or mutual funds, and you even have not disclosed anything in the capital gain section. So that may be a reason for getting pegged. However, TDS claim, if you are claiming, say for example, a TDS of 10,000, but your 26 AS is reflecting only 8,000. So that is something that system will automatically highlight. But if your income mismatches by a certain amount or something, that threshold has not been defined because as I mentioned, it's computer generated, so it is making a reconciliation, and if you believe so there is some missing of the transaction and all, it sends an automated system generated email to the taxpayer that there's a mismatch between what information we have and what you have filed.
And in certain categories, suppose say capital gain, if I have say I've had a capital gain of say 2 lakhs, and I have only disclosed 1.8 lakhs, so see just one transaction was missed or something, but broadly things were there for small little transactions. I mean this is just number, like say difference of 20,000, but small little transactions are also being picked, or is it like generally bigger transactions will be? And I'm not asking you to specify a number here, but
So
any
I think, see, based on what we have experienced with our clients and all, and with the people we have interacted with, is that even the smaller numbers are being picked because there is a discrepancy that is clearly apparent on the face of it. Because
okay.
something that was there with them and you have disclosed something not there. But as I mentioned, I would like to add one thing as well. You need to check your AIS thoroughly because at times I have seen people AIS being reported with some income which is not theirs. So you can obviously raise a concern with the tax authorities there that this is not something pertaining to my PAN, and accordingly you can maybe make a disclosure and file your return accordingly. But I would strongly suggest, do check your AIS, do check your 26 years properly. If there is any discrepancy, do highlight it because you file it considering, okay, this was not mine, so I'll need not do anything. But the system sends you an email automatically that this is a mismatch, whereas it actually is not.
Right, right. Okay. Okay, something to be aware of, people, like,
Yes,
just to watch out for. And if you are getting notices, as Rishabh has pointed out, ki first of all, don't panic, don't be scared. It may be the case ki it's just, it may be an, raised in error, ki it was not your error, not a mistake from your side, and they're just asking for a clarification. So first thing is not to panic, right? So
that's true.
okay, one thing that I do want to ask, Rishabh, is we were talking earlier, and you mentioned that a number of things are changing, in terms of filing this year, the amount of disclosure that is needed, like, if you're asking for any, particularly any declaration that you are going for. A number of things are changing because we'll be filing still with a new tax regime giving a full rebate till 7 lakhs only, right? 12 lakhs will be hitting from next, I mean, the current financial year, not the one that has ended. So the filing will be happening for the previous financial year, which has already ended, wherein the limit was only 7 lakhs in new tax regime that would be tax free with rebates and stuff. So in that case, what has changed, Rishabh, for disclosures?
So majorly disclosures are required in your old regime because there you are making certain reductions, exemptions. And so now what if we go by some instances like maybe for example ATC which we are getting deductions for our investments. So you need to specify what sort of investments, maybe the account numbers like PPF account number, the amount that you have invested in that. Apart from that, if you have insurances like medical insurance and all, you need to provide your insurance provider name, your uh, amount that you have paid, and all those stuff. When you're claiming your home loan deductions, then you need to provide your date of sanction, the bank institution providing you that loan, and the loan account number, the principal outstanding. Yes, obviously there are some details which were not asked last year. Now you need to be ready with those details. If you are going for the old regime, you are taking those deductions and exemptions. So be aware about that. Even for the NPS, it is asking PRAN. So PRAN is issued once you have your NPS account, and you need to disclose that PRAN number as well if you are disclosing the deductions under your NPS as well.
So I mean, people used to provide those proofs earlier as well, right? I mean, say for health insurance, life insurance, they were giving the documents as well. I mean, earlier as well, right? So something changed there, or?
So no, what I would say, Ankit, there are two sets of people as we are discussing: people filing on their own, people filing through consultants. And at times, the consultants, since they would be obviously requiring the amounts for filings, post checking with their respective clients, that what amount did you pay. They may at times provide their receipt only that we paid this amount as a debit or something to the account as well, but they may not have the policy or something in place. Uh, this has happened in the past. People filing on their own maybe say forgot to pay their premium, and considering the tax receipt, considering the premium receipt of the previous year filed stating, oh, okay, we had that receipt and something like that. And that used to happen. But now, since this has been brought in, I think there will be more check and balances from the income tax authorities. They would be more scrutinizing those details and cross verifying with the service providers as well, like the financial institutions, your insurance providers, so that
Okay.
any discrepancy or any false claims that you were making are strictly dealt with. And obviously, you will be penalized if it's a mistake that you're making deliberately and it's not a genuine one.
Okay, so everything is becoming much more stringent, like the disclosure that is needed, the accuracy of things, and the penalty as well if anything is wrong.
Yes, that's true because the thing is, the government is also trying to increase their what you say the tax collections, but they don't want to burden the honest taxpayers actually. So they don't want to trouble them, but they do want to keep those people in check, those who believe that we can claim anything and everything, whatever is available in the Income Tax Act without having any substantiation for those things. That is why I think these checks have been brought in, but it makes filing a bit complicated for the persons choosing old regime because they will require a lot of details to be put in.
Mm-hmm. Okay, guys, so be careful when you're entering this, like with the numbers that you're entering, the policy number, the amounts, and everything. Be very careful with those.
So, Rishabh, I wanted to know, like we talked about a few of the mistakes, but if you can just like list out what are some common mistakes you see people make. And I think maybe Rishabh and Ankit, both of you can, first Rishabh and then Ankit, maybe you can add to the list, because I think from your perspective is also we see clients make these mistakes. So Rishabh, if you want to go first.
Okay, so first thing, as I mentioned in our ongoing conversation as well, is that people don't make a reconciliation between 26AS and AIS. That is the mistake we have seen very commonly happening, and most of the notices for a normal person is received based on those. Apart from that, people not disclosing their sources of income appropriately. Maybe they say, okay, we have we did some transaction in mutual fund or shares, but there were losses. They won't even pull out their tax report. And when you actually say they will share their tax reports, or when you see their tax reports, it's not the losses. They may have loss in one demat account, but they may have the profit in the other demat account, and they missed reporting it all, because that generally happen with the people, that they forget that they are operating multiple accounts, because one they may be using for investing, and that's maybe giving them good returns, while the other one is maybe trading and they are having certain losses in that. But you missed reporting that at all. So these are the normal scenarios that we generally encounter. Even people claiming some deductions or exemptions, which they don't have any substantiation for, is also one of the reasons that I see the problem coming in. Apart from that, Ankit, you would like to add?
Yeah, one thing that I that we have already talked about is like, people not filing taxes altogether, under the misconception that okay, if it is under 7 lakhs or 5 lakhs, they don't need to, right? So that is a big mistake that I have seen people making. And yeah, what Rishi was telling, people not knowing or just forgetting that they have one more account. Many a times it's like people have a very old account wherein the parents might have done some FD, or some money is just lying there. You are getting interest on that, and it is supposed to be disclosed. So similarly, the example that Rishabh gave for investments, similarly for savings and investments, there are details as well. Many times people don't know about it, or for that matter, life insurance policies that they might have bought, or their parents might have bought, and it is still continuing. So for things like those, not making appropriate and sufficient disclosure, like disclosing everything. So those
Yeah.
are two very common mistakes that I've seen.
Okay. All right. And Rishabh, like if in terms of like selecting a person to do their taxes, right? And maybe it's maybe, I don't know, it's weird to ask you this, but and again, maybe both of you can answer this question as well. How do you know कि someone is a good tax consultant? Like we always talk about how to select a good financial advisor, right? Like what are some of the things? Like kai baar hota hai ki, I have seen this, that people get their taxes filed and then there is some error that was made and it's not the mistake of the individual. So I think a few things like, how do we know ki everything has been done properly, or what are some things that we can do from our end?
I'll like Ankit to go first on this, because I may be bit biased, as you mentioned,
Yeah, that's what I
in
said. It's
answering this
good to
question.
ask you this question.
So
Ankit,
let Ankit go first, and
yeah,
then maybe if I want, I can add to it.
yeah.
Okay, so partly, Namita, as an individual, I'm a very picky person and as well as a lazy person. So I'm like, if something is working for me, I'm not going to change it. Okay, what that means is, if I'm using a consultant or any expert, like, or generally any product in my life, like if I am using a product or a service from someone which I'm happy with, it is not giving me any trouble and things have been fine, I'll just stick to it. If I see that there has been some issues, then just looking at it very objectively, not judging the person, but looking at it objectively. And when it comes to someone, like when someone you're talking to an expert of any kind, uh, it's like you should be asking questions, relevant questions, not bombard them with just go to chat gpt and ask, okay, what all questions to ask, not like that, but genuine questions key that is relevant to you. And if they are not able to answer those questions, or they are trying to just dodge the question altogether, that is a red flag. Okay, I do understand in terms of taxes, filing of the taxes, that particularly a lot of people try to file taxes towards the end of the very very close to the deadline. So there is also pressure on the people who are helping you file the taxes, so they may not be able to do that. But if you are not doing it at the last moment, you have time. if there is something that's not working, definitely ask them the questions, and if they are able to explain it to you properly what is happening, which means the person knows it. I mean, of course, you, because the other person is the expert, you are not, you can't really evaluate them, if that person is actually technically sound or not. But just whether they are able to answer your questions satisfactorily or not.
Okay. And one more thing that came out of this was don't wait till the last minute to file your taxes. I think we have seen many, many such cases.
Yeah, I
Um,
think it was last year when we had to say no to a few people towards the end, because the income tax department, the website has slowed down a lot, and it was taking a lot of time to complete the filing, the generating the OTP and whatnot, completing the verification and submitting stuff, and we just couldn't do it because again there was so much of backlog, and it was, we weren't sure that if we will be able to submit it properly, so we had to say no to a few people. So yeah.
okay. So we have a few questions
So Rishabh didn't
from.
answer the question.
Oh, sorry, Rishabh, do you want to add anything to that?
So I think Ankit mentioned that very objectively. I would just add one point to it is that whenever you are choosing a consultant, don't choose it just for a compliance purpose. You may be able to plan your taxes, maybe not reach out to them only at the time of filing stage, but at the time of the stages where you can plan your taxes in a better way from the start of the financial year itself. It's not an exercise to be done in the month of July only. So that is my suggestion. And if your consultant is available to give you that advice and is open to providing you multiple options, I think then you can go ahead with that consultant because that is much more important because compliance is only just a part of it. Majorly is optimizing your tax structure as well.
Yeah, no, fair point, I think. And typically, we also see that people look at their finances very, like, not holistically. So they look at parts of it. So they look at investing, insurance as silos. But I think our whole philosophy at Wealthup is that you have to look at your finances holistically. That's extremely important. So thanks for pointing that out. So, yeah, like I was saying, we have a few questions from the audience that I want to just ask you. So the first one is that am I required to file if TDS is already done? I think we've answered this. What if my PAN, Aadhaar, and bank details are mismatched?
Okay, so I think that's a genuine one because we have seen people having that problem. Just get it rectified because it's important that you have your details matching because your refund gets delayed because of these factors. Because if your bank account and your name is not matching as per the income tax records, your refund gets withheld, and unless and until you make those corrections, your refund is not credited to your bank account. So yes, that's a genuine mistake that happens because people may earlier have different proofs or maybe made an error while applying for any of the documents. I would suggest make a correction either in the document which you believe has some incorrect statement or some statement that requires updation. Just get it updated and you will have no problem post that.
Okay. The next is how do I check which tax regime is best for me, and is it easy to change it?
So one, I'll take it in two parts. One is you can check it at your income tax portal as well, the income tax calculator to help you assist that. You can reach out to any consultant that you may have for advising on it. And apart from that, the second part which I would like to highlight is selecting regime is optional for salaried or individuals which do not have professional business income. They can switch between regimes each year. That is an option given to them. But people who are having business income or professional income, they have to choose it like very diligently because they don't have an option to switch as and when they require it. It's a one-time option to switch between the regime.
Okay. The next question is what's new for home loan, HRA, and house rent receipts in 2025?
Okay, so there's no change in the limits per se. So the limits remain same as last year they were. The thing is the additional disclosures that we discussed. That is, you'll require those information, those disclosure, like you need to disclose your even the salary in a breakup stage, your basic, your DA differently, yeah, then your HRA received amount, then how much rent you are actually paying, you're residing in which in a metropolitan city or not, and that is how you need to give those disclosures. And as you mentioned, I just would like to add one point. When people are claiming HRA, they are having just receipts because I've seen people maybe showing HRA in the name of their parents or maybe their relatives. But know that well, if you are just having the receipts and you're not making a genuine payment, you are not using that property, it's something that income tax tend to catch. Reason being because when you're not making the payment, it's not a genuine transaction. You're just trying to shift your burden of tax to someone else, and that is not permitted. You need to have a genuine rent payments, your genuine rent agreements, your rent receipts to substantiate that you are actually using that for your own purposes. That is why HR is being allowed as a deduction.
Right. Okay, so I think that
Something
kind
that
of
we need to
brings.
be aware of, because again this is another mistake, people, I have noticed people making, wherein they have gotten into an agreement with someone, and the transactions weren't happening, digital transactions, showing as a proof that okay, you have actually paid rent, that is not there. So if you can't prove that, be careful in claiming those expenses.
Okay, so that actually brings us to the end of the conversation. I know I definitely learned a lot about filing taxes, and knowing me, I am just going to, talk to Ankit and get it done because I am not someone who's going to try and file for myself. But yeah, I think I want to do a quick summary of what were the key points from today. So if Ankit and Rishabh, you can just take a moment to think about what is your key takeaway. So let's say someone just joined the session right now, and what is it that important things, one or two things that they should definitely know, and then we'll close off the session. So
I think I'll go first because whatever I miss out, Rishabh will be able to cover. So, guys, don't be scared of tax filing. Do file your returns. Okay, it's important. So, do file your returns, and don't be scared. Just take a decision whether you will be doing it on your own or you need help. If you need help, do not hesitate. I mean, feel free to reach out to us, and but don't hesitate, and make your disclosures properly. It is going to be this time. Things are becoming more stringent, so you need to make more disclosures, understand and disclose things properly, so that the chances of you receiving a notice is on the lower side.
great, thank you, Ankit. Rishabh.
Okay, first of all, I think as I have been highlighting again and again, make a reconciliation properly with your 26 AS, AIS, and your sources of income. That is very most important thing because it is the major reason for receiving automated notices and your risk areas being highlighted by the income tax department. Apart from that, don't claim anything that you cannot substantiate because that is going to be a challenge in the coming years. And as Ankit and highlighted, and I have been also pointing it out to the people that notices will tend to go up because they are checking the genuineness of the transaction by using digital means. That means they can check a lot of transactions on a lesser time compared to what was done earlier. And you may be in a fix because you are claiming something that is not your own to claim.
Okay.
Okay.
I think that those are the most critical points that I would like to highlight. And please, as I mentioned, make it even if you're not required to file, make it a habit of filing because that helps you stay a bit updated, maybe remain a financially and tax-wise bit more aware. So that once you start earning more, and we believe everyone will be growing, so it helps you stay updated and do it as a habit rather than as a burden.
Perfect. That was great, Rishabh. And from my end, the one takeaway is don't wait till the last minute. Jitna jaldi ho sake when it's open, file because it puts a lot of pressure on the system, and then you have less time to gather everything. So then there's more chances of mistakes. So thanks so much, Rishabh, for your time. Thank you for sharing your expertise with us. It was a pleasure talking to you.
Yeah, thanks, Rishabh. Thank you so much.
Thanks, Meda. Thanks, Ankit, and thank you everyone who has been attending it. And maybe I think they also take that key takeaway that they start filing and they do it in a timely manner.
Yeah. And for everyone who's watching us, we do this every 2 weeks. So, we've had conversations. You can go and check out the recordings on LinkedIn about smart strategies to buy a car, how to be a smart pet parent. We have conversations on real estate coming up, as well as on family planning and planning for fertility treatments. So that's coming up in the next few episodes. If you follow Ankit on LinkedIn, you'll know when they are. And thank you so much. And yeah, until next time, we'll see you. Thanks. Bye bye.
Thank you, everyone. Bye bye.
Thank you.